Hey guys, what's going on? It's Rekt Capital and welcome back to another episode here on the YouTube channel. Thank you so much for joining me in today's video on the 4-year cycle, but also about what we tend to see in terms of return on investment in an August month across time. And a lot of the data will be quite misleading, and I'll talk to you why based on where we are in the 4-year cycle, couple that together as well with a bit of the insights from yesterday's video, which is essentially the weekly bearish divergence forming here on Bitcoin. And also, what sort of downside could we see? Should we see history repeat itself in an August setting, given where we are in the 4-year cycle? So lots to talk about. Subscribe to the channel for more videos like this in the future, and let's dive right into it. So the first thing that I just want to mention here is that in terms of 4-year cycles, right now we're in the analogous candle 3. So candle 3 is essentially your bottoming out candle across the 4-year cycle. We tend to see a final bottom form here. Bitcoin reverses for the first time. It's the beginning of a new macro uptrend, but we're still macro consolidating below a key 4-year cycle resistance. And across time, you can see that the best Bitcoin can really do is revisit that 4-year cycle resistance. And at worst, it can really fall short from that, but produce a lot of downside volatility. In this cycle, we didn't really have much downside volatility, not much upside volatility, though we still have, many months to go until the new yearly close to just confirm this candle 3. Technically, we could still see a 2019 upside wick of some sort hit form here on this candle 3. But most importantly, we need to mention here that this is a pre-halving year. So if we look to the 4-year cycle, a very pivotal fundamental catalyst that just shapes how candle 4 develops and then candle 1, the pre-halving, or at least the halving event, the Bitcoin halving tends to occur in a candle 4, which is where we see trend reversal into a new confirmed bull market, new confirmed macro uptrend. And we can see that candle 4 is quite explosive. It can take us to new all-time highs, as we saw in the previous 4-year cycle. In the past, this hasn't quite been the case, rallying to new all-time highs in the candle 4, but we saw that in the previous 4-year cycle, and who knows, we could see that next year, 2024, in the year of the halving. So candle 3, definitely a pre-halving year, really setting the stage for that candle 4 and candle 1, which is where we tend to see a bull market peak. Candle 1 has historically been a euphoric and explosive candle, but perhaps we're seeing a bit of diminishing returns in candle 1, although we're seeing candle 1 maybe transfer some of those gains onto candle 4, which is why we actually saw candle 4 rally to new all-time highs in the previous 4-year cycle, in comparison to this candle 4 where we fell short of an old all-time high and rallied to new all-time highs only in candle 1. So candle 4 is the halving and candle 3 is the pre-halving period. So if we just look at August and what sort of return on investment we can get if we buy on August 1st and sell at the end of the month, or whatever the case may be, generally across time we tend to see a varying amount of retracement. In 2013, for instance, we saw 30% towards the upside, 2014, 17%, 18%, 7, 65, and the list goes on. But what I really want to focus on is the pre-halving periods here for an August. So 2015 is a pre-halving period. That's 18%. So if we just cycle back here to 2015, there we go. Candle 3 in 2015. We can't really see August here, but the main point here is that this is 2015, a pre-halving year, and then 2019, a pre-halving year. So naturally, we should also compare 2023 as a candle 3 pre-halving year. So the two most important metrics here for an August ROI for Bitcoin is the 2015 minus 18% retracement, and in 2019 the minus 4% retracement. So in 2023 it's quite likely that we're going to see, based on these two data points, and two data points aren't really enough when we're trying to make some sort of conclusion, but we see that 18% and 4% are both downside months of varying degrees, shallow dips, and a pretty standard retrace, not a correction as you'd see, for instance, in a 30% correction. That is really a significant drop, but 18% nonetheless a standard correction. If we're looking at this weekly bearish divergence, and we've been talking a lot about this in yesterday's video, feel free to check that one out if you haven't yet. But at the moment we are forming lower highs on the RSI and higher highs on the price action, and for the RSI to break this downtrend, that would invalidate this bearish divergence. But until that happens, we're very much in bearish divergence territory, since essentially the April local top-ish, this is technically the same major resistance that Bitcoin is struggling at. And you can see here, for instance, if we just do this again, one upside wick here and then quite a strong rejection, whereas we've had 4 weekly upside wicks beyond this resistance, and still FOMO trapping, not much buy side pressure enabling further upside beyond this major resistance. So we've been able to hold here and really give it a go, but no real traction in attracting strong bullish interest beyond this resistance. FOMO buyers unfortunately getting trapped here, many more, notably many more compared to this one upside wick where the FOMO wick and the trapping was very brief and quick. Here we had a prolonged period of trapping, and it looks like supply liquidity has been dropped onto Bitcoin's price action, especially if we can't hold this 29,250 level. So going back to those August figures that we tend to see historically in pre-halving August, 4% and 18%, if we were to see this bearish weekly divergence play out, 28k is where we could see that 4% retrace or that 4% dip from current price levels, provided of course if we compare this to the 2019 period. But if we compare it to the 2015 period, then an 18% retrace from current levels could see us drop into 24k. And the thing that's interesting about 24k is that we have really been talking about this pattern of an inverse head and shoulders, which isn't really depicted here in the chart to the best of my ability. I cut this one out by accident, but this is essentially the neckline of that pattern. And if you can note this as a left shoulder, head here, and right shoulder, we break out and then pull back, downside wick into this region, really trying to successfully retest this old resistance as a new support, but nonetheless not actually picture perfect retesting this, but downside wicking there, front running from the buyers, and then a recovery. But one could argue that this was never really successfully retested as a new support, even though we got very close. Although front running, liquidity grabbing here did occur, not quite your picture perfect retest. And if we're still going to make a thesis for an 18% retrace from here, that would be satisfying this post breakout pattern and enabling that retest of the neckline of this head and shoulders. And that's a retest definitely worth watching, because that would validate essentially this inverse head and shoulders, even though price broke out around in March. So that's quite interesting. We're in August. It's been now 5 months since this breakout, but what's quite interesting is that one could make a case for only just confirming and validating this pattern as a breakout pattern if we get that retest after successfully retracing 18% from current price levels. And this is going to occur if we get a monthly close, or actually we could even get a weekly close below 29,250 to confirm this as a new resistance, because we saw back here a 29,250 resistance check here that can yield quite a lot of downside. And if we get a lower high, like we saw the series of lower highs here, because we're still seeing a series of lower highs here as well, if we just check this into a resistance drop and then relief rally bounce but actually make lower highs, then we're probably going to be setting ourselves up for a downtrending channel of some sort, like we saw a few weeks back. And the validation of this weekly bearish divergence and that should bring us closer and closer to those mid 20k regions. And then it's going to be make or break, because for instance here is a really important support region for Bitcoin's price action. So let's see if we can get here. That would require more than a 4% dip. Of course, anything here from 18% to 4%, this is all technically possible, especially if 29,250 flips into a new resistance. Then this is essentially a range we can really start to look at and pay attention to over time. So that's about it for today's video. I hope you enjoyed this one. Subscribe to the channel for more videos like this in the future, and please leave a like for this video if you really enjoyed this one, because that will help with the algorithm and shareability of this video. I'd really appreciate a like and of course a subscribe. Thanks so much for watching this one. Thank you once again, and I'll speak to you in the next one. I'm Rekt Capital. Speak to you soon.